You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome to the show, Eric.
Thanks for having me back, Jim. Great to be here.
Deutsche Bank wants the Fed to raise interest rates as soon as it can. Is that good advice?
Well, I'd probably be venturing out of my comfort zone commenting too much on economic policy like that, but you could certainly see that perpetually low interest rates and bordering on negative interest rates in some countries hasn't accomplished the targeted end. So I suppose throwing something else against the wall and see what sticks might be the case. But the thing I've always wondered and kind of contended too is that when that never-ending cycle of lower interest rates becomes really obvious. I mean, yeah, we had the little rate hike in December. But I think, within days or a week or two already, there was speculation that maybe they'd like to take it back, that, oh, wait a minute, here's some other numbers that aren't as strong as we were hoping. They won't have room to do it again for several quarters. I think that when it becomes clear that rates have bottomed out, you could see at least an initial flurry of activity in things like even real estate. Now, I know real estate's recovered, but, when there's constantly that mentality that, oh, I can put it off, rates are, so low, they'll continue to be low. It's often in that business cycle when you get the initial turn up that it ironically spurs a lot of activity. And that's because you kind of wipe out the complacency that's been there for so long.
Well, talk about real estate. Vancouver, the craziest real estate market probably on the planet, where houses that really are worth $750,000 are going for $6 million. It's a feeding frenzy when it comes to real estate here. And
yeah, there seems to be a lot of extremes, throughout the U.S. and in metropolitan areas around the world. So that's kind of the real delicate balance is things you do that might curtail one frothy market might end up really dooming a very tenuous market. And, I know there's still a lot of areas where the real estate rebound has been tepid at best. And like I said, I think that a rate thing like that might initially spur some activity, but, once that dead cat bounce takes hold and plays out, then you might see another leg down.
Well, at least if you put your money in the bank, they might give you some interest instead of taking it away like they do in Japan.
Right. That's the other thing is that it has really disincentivized any sort of savings. But there again, if you see the realization change, the perception, and that's what I'm always talking about with the markets, with analysis, you could sit and argue what the fundamentals are, but what's really impacting the market is the perception of those fundamentals. And if you get the perception that things have changed, even businesses that might be holding off on major expenditures, anything that might involve credit, might suddenly decide, okay, now's the time to do it because rates are going to start gradually heading higher. But there is certainly a downside to a lot of that as well if you don't have a solid economy underpinning it all.
Taking a look at what's happening with oil, are we going to see the price go up as the driving season arrives early because of a very mild winter?
I could certainly see that, and it would fit very nicely with the longer-term cycles that I know we've been discussing in these interviews for a year or more now, and that was that the oil markets, crude in particular, would plummet into either December 2015 or January 2016 when the greatest synergy of cycles comes together. And the oil markets have fulfilled that. They've reached extreme downside targets. You have other corresponding markets that have also shown signs of a bottom. I know last year I shared with you a couple times my analysis in the Canadian dollar that it would also drop into the very beginning of 2016, and that it should spike below 70 before a bottom took hold. Well, we saw that in January, and now it has rebounded as well. And so there are signs and there are cycles and the setup for a major bottom in oil. And so things like the driving season, particularly since it does appear like it'll be coming early throughout North America, that could certainly spur an initial rally. And if you are able to kind of lump together a couple factors at once, maybe some more concrete decisions out of OPEC or something, some action that backs up their words, or any type of upheaval. It doesn't have to be a huge thing, but just something that injects some uncertainty into the markets, particularly in the Middle East, that combined with driving season and demand picking up a little bit, could certainly create a nice rebound in the oil markets, particularly since they've probably overdone it to the downside. So just getting back to an equilibrium point, and then they'll probably overshoot that on the way up, as the markets always do.
What about precious metals? Today I noticed the stock markets were kind of flat, a little down, gold a little higher, silver a little higher. Are they going to be playing a little up and down game right now?
Absolutely, and I know that was even what we talked about a couple of weeks ago. Gold and silver had fulfilled some important 2 to 3 month upside targets in early February. Gold had gotten right up to that major, what I called foreshadow target. It needed to exceed 1257.5 in order to fulfill a signal that was triggered back in September and October of last year and then confirmed in mid-December of last year. Once the buy signals were triggered in mid-December, the main 2 to 3 month upside target in gold was to see it exceed 1257.5, got up to about 1263 on the April futures, which is what I was using as the benchmark at that time. And so that did two things for me. One was it powerfully validated what I've been expecting and saying about 2016 for the last 2 years. And in validating that and in confirming the first leg up, it also kind of sets the stage for what's expected a little bit down the road in the coming months. And simultaneously, it pinpoints where an initial top is most likely. And that's kind of the paradox with some of these indicators that I explain to my readers, that you have to really distinguish it with indicators, whether it's a leading trigger signal or whether it's a lagging confirming signal, and knowing what to do with that. And so gold breaching that 1257.5 on the way up was a powerful confirmation, and at the same time it was saying, okay, it's gone about as far as it should for this initial surge, so we're likely to see some volatile consolidation in the weeks that follow. I've got some intermediate cycles coming into play next week, March 7th to the 11th, when I could see a a low, particularly in silver, which has retraced more than gold here. But then there's an even more significant cycle that I'm watching closely, and even as it gets closer, we can talk more about it. But it comes into play in mid-April, and it overlaps, or it coincides with a very intriguing historical cycle that I've discussed for the last 15 years or so, and I call it the date of aggression. And it looks like the precious metals could be poised for a bottom right before then, which, if the market action leading into that confirms what I'm expecting, then I would be looking for some sort of surprise event, either geopolitical or military, right around that time frame, just after the first half of April. So I think we're going to see a lot of up and down action. I think that the next big leg in gold and silver is going to be in the second quarter of this year, and already gold has been solidifying its next upside target, which comes into play around 1310. And it's also kind of identifying where even some larger degree confirmation signals, and by confirmation I mean confirming that we're in the beginning stages of a multi-year bull market, where those confirming signals would be triggered.
We'll have more with Eric Hadik right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Fort Langley, Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Eric Hadik. Eric, I know that you follow so many different cycles in so many different areas, and I asked you, do we see any convergence of cycles depending on who wins the U.S. election, Hillary, say, versus Donald?
I think there's a couple of really important, big picture, long-term things that you can certainly associate with that. One of them has to do with the dollar. And from a general standpoint, if you look at the last 40 years or so, you can see that, and you can even hear it in some of the talk and the mindset depending on which party is in power. But the Republicans tend to favor a declining dollar, increasing export potential and all the things that go along with that. And the Democrats, whether they're favoring it or whether it just tends to rebound when they're in office, they tend to coincide with a strengthening dollar. And you can go all the way back to like the 80s when the dollar really took its big dive after the Plaza Accord. And because that was early in my experience with the markets and with the futures markets, certain things really just kind of got burned in my psyche. And one of them was, during that time, how frequently you would see James Baker on the television going from one show to another, talking down the dollar. And, at the time, I think he had, in the Reagan administration, at one point he was Secretary of Treasury, and then another time, I forget whether he was Chief of Staff or which cabinet positions he held, but during his Treasury days, he was it was clear that they wanted a declining dollar. Now, the dollar was, it had become prohibitively strong at that point and was really impacting exports. But you could see that same mentality during George W. Bush's administration, and who was the legal counsel that really helped spearhead Bush's win over Al Gore during the whole election debacle, James Baker. And so you know that he probably had some strong influence on that administration as well. But my point is that, so you saw the dollar decline from a peak in late 2000, early 2001, until a bottom in 2008, almost perfectly lined up with the administration. And then it went through a bottoming phase for a few years during the early parts of Obama's administration, and has been strengthening in recent years. With the cycles that I have already anticipating a dollar peak in 2016, it does make me wonder if that's any precursor or omen of whether we might see a Republican administration the next time around. So that's one thing I'm watching. But the other thing that I think is going to be very intriguing, that if everything continues on the track that it is now and that Hillary and Donald become the ultimate candidates for each party, I'd be very interested to see how much, because you know that the rhetoric is going to get ugly. And Mr. Trump has made it clear that, there's no holds barred and you just shoot from the hip, and whatever pops into your mind, you just throw it out there and worry about the ramifications later. It will be very interesting to me to see if he obviously, tries to dredge up whatever he can. One of the things that has been a recurring theme with the Clintons going back to Bill Clinton's administration, and that has been some very spurious connections to China and to key figures in the PLA and leaders of Chinese government. And again, you look at the scandals or potential scandals back through the original Clinton administration, even to Indonesia's premier president. Pardon my ignorance on the correct title for Indonesia, but Riyadi, who had very close ties to Chinese, and some of the suspicions / scandals during that time, and then even during Hillary Clinton's, I think it was during her Senate run, was it the Johnny Huang speculate? It was just this ongoing thing that it kept popping up with different figures each time. So, it wasn't just one or two people that was being targeted. And I've already expressed for the last couple of years why I thought that geopolitical cycles, particularly in China, were on a collision course coming into 2016, 2017. And, first I see those cycles, then I start watching closely for, are there fundamental events that are corroborating this, that are setting up to be the potential trigger points or the tipping points. And, one of those was even through last year and now early part of this year, the whole conflict or potential conflict in the South China Sea. And the rhetoric keeps heightening and keeps intensifying there. Then in January, I think it was, that China landed a bomber on one of their artificial islands there, and that's got Vietnam and Philippines and others who claim different territory there, heightening their awareness and their defense. So that's one target area, but it makes me wonder if during election season that becomes a real target if Mr. Trump is the Republican nominee. And so I'll be watching to see what type of animosity is created through that, and if that does become one of the talking points later in this year.
Eric, thanks a lot for chatting with us.
Thank you for having me again, Jim.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.